Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the WorryFree Retirement, with your host, five-time author and fiduciary, the money missionary himself, Tony Walker.
Hello and welcome to the WorryFree Retirement. I am your host for the next 28 minutes or so, Tony Walker. And with us in the studio, as always, is America's favorite financial sidekick, helping to produce the show, Aaron Orander. And we've got a really good show for you today. And actually, I hope you caught last week's show where we talked about what I call the three-legged stool of the forms of mailbox money. Those being, number one, your typical pension plan. I know we addressed last week the Kentucky's Teachers Retirement Plan and some potential issues with that going on, and I know you teachers out there know what I'm talking about. I'm going to go into some more detail on how to understand and evaluate numbers as in regard to these calculations and why is there such a problem now. So we had pension plans. The second form of mailbox money is Social Security, which again, part of that three-legged stool. Now, most people are eligible for Social Security unless you're a teacher. I met with a young lady the other day whom I know, and she has to deal with a lot of teachers in the line of work she's in. And she said, Tony, I loved your show last week because you broke it down into terms where most people can understand it. And in fact, before we went on, Aaron and I were talking about this. Probably what I need to remember sometimes is, we get so involved in talking with so many people. In fact, today's date of this recording is October 16th, 2017. I've already had probably 12 to 13 appointments today. We got a break in between appointments and I'm doing the TV show. So remember, folks, this is what I do for a living. Not the TV show, but meeting with savers and helping savers worry less about money. So we run into so many different instances of things. In fact, we shared the case last week. That was an actual case. When we get into the whiteboard here in a few minutes, you're going to see very, very important goodies on how to calculate and understand how pensions are calculated and why you need to be concerned about these calculations so you won't have problems in the future. We're going to talk about the 6% hoax in the next segment and deals with this whole deal of how do you value a pension in the first place. So we have pensions, that's number one of the three-legged mailbox money stool. Social Security, number two. And then finally, number three, one of my favorites, is private annuities issued by insurance companies. So when you think about it, if you're a saver and you're like me, you're more concerned about the return of your money than on it, and you want to make sure you don't run out of money, you've got to consider one of these three, hopefully all three, but if you can't get one of the two, many people don't have pensions or access to pensions. Some people might have a pension but don't have access to Social Security. But everybody who can fog a mirror within certain age limitations can purchase an annuity. So this is why we offer so many annuities. Now again, I'm going to get into the Charles Schwab platform. That's going really good. I want to tell you a little bit about that. But this is why annuities are so critical to savers. This morning I was delivering an annuity contract with the income plan that I'd worked on, and the lady just shook her head. She said, Tony, I don't know, the more I keep looking at these annuities, the more I like them myself, but I don't understand. Apparently she just recently Googled something the other day, and there it was, an article slamming annuities. Well, I said, can I see the article? She said, well, I printed it off for you. I'm looking at the article, and it's talking about variable annuities and high fees. So folks, you got to be careful out there. People talking about high fee annuity contracts, we don't sell those. Those are variable annuities. We do fixed interest, fixed indexed, and immediate annuities, which generally come with low fees or in some cases, no fees at all. We're talking about annuities here real quickly, but why don't you order? There are two booklets you could order. One is the Annuity Decision Guide for Savers. The lady that came in today had that thing back out, had notes all over it. I think it's the best book written on annuities. It gets down to all the stuff I've experienced over the number of years. Again, we've been offering annuities prior to most people even knowing what they were. So a lot of people are selling annuities now. We've been providing annuities well over 15 years when they first started coming out with these indexed annuities. So we've seen them. We have a track record with them. Order that booklet at TonyWalkerFinancial.com, or you can order the Mailbox Money for Life booklet, which takes it one step further and talks about this whole concept of guaranteed lifetime income, or what I like to call mailbox money. Before we go to the whiteboard, though, as you know, my son-in-law is in the business with us. Trey Juergens, doing a great job, incidentally. By the way, we were at a conference recently, and he was sitting there, and somebody asked about overfunded life insurance, one of our clients, and they said, "What's all this overfunded life insurance I keep hearing you all talk about?" And he said, "Well, Tony's done it for years, and that's what I've kind of taken on. That's part of my role." And he explained how one of our clients set up 3 policies, overfunded life insurance policies for 3 grandkids, and how simple it was to do that and how much money they're going to have one day. And the client of mine who didn't know about this said, "Well, I didn't know you could do that. I can do that for grandkids?" Yes. So by the way, if you want a free illustration on overfunded life insurance, whether it's for you, children, or grandchildren, this is a great way to pass on tax-free wealth. And I'm going to show you an example in another show coming up, how you can use it tax-free for your own well-being. I'll show you how to do that in a later episode. But what you want to do there is you want to email Trey, Trey, at TonyWalkerFinancial.com, Trey at TonyWalkerFinancial.com. Say, "Trey, I want an overfunded life insurance illustration." He'll get with you and get all the details. But speaking of Trey, so we'll go show you a close-up of this. This is cool. Trey, again, he's a young man. He had a 401k at a prior employer, very small account. He said, "Tony, can I move it over to that new Schwab platform you've got?" Here's our disclaimer. Put that up, Aaron, real quick, just before we get into this. We do not work for Charles Schwab. We are fiduciaries. I'm an independent investment advisor. The reason I like Schwab is because their fees are so low and they work so well with independents like myself. So if you're looking for somebody totally non-biased, independent fiduciary, maybe you're sitting there with a bunch of statements you don't understand, or the cost is ridiculous, let us get a chance to do a free fee analysis and look at your current brokerage statements. There's no cost or obligation, and this is what you get. Let's take a look at this, and I'll have Aaron kind of just thumb through it, but I'm going to thumb through it. Look how simple this is to understand. This is Trey's quarterly report. There's really just a simple opening letter. It shows his beginning value and ending values. And Aaron, be sure to white out his contract number. We don't want somebody liquidating this huge account of Trey's. Well, I tell you what, we're going to white out all of my selections. We don't want people to think they should select these. But you can see there's different holdings. And then you get over to the actual rate of return. Shows you the quarterly rate of return. And then finally, you get over to the fees. Now, in Trey's, it's a very small account. We don't have minimum accounts. I charge my son-in-law a whopping $3.12 for the last quarter. I mean, that's next to nothing. So the beauty of the new platform with Schwab, folks, no matter what account sizes you have, you could open these up for grandkids. Again, we just want to help savers worry less about money, and I think that's the most competitive managed platform in the industry. Give us a chance. If you'd like to look at the Schwab platform, log on to TonyWalkerFinancial.com, click on that Let's Get Started button, and we'll get with you right away. All right, so we're talking about the second part of this three-legged stool. My good friend of mine who said, "That was a great show you did last week, Tony. Can you expand on that a little farther, though, and help us in the audience understand how these pensions are even calculated?" Dumb it down like a third grader. Dumb it down so that we can understand it and try to understand calculations and assumptions. So when I come back, this is going to be really good stuff. You need to understand, folks, when you're doing retirement projections, that's what they are. They're merely projections. So I'm going to show you the difference between a guarantee, projection. They slip the projection in. It's not an oxymoron. In other words, if you have a pension, that's supposed to be guaranteed income, right? So if they project something that's incorrect, something's going to go afoul, which is why we're having a problem right now with a teacher's retirement. And I'm going to show you how that will work. Then secondly, I'm going to come back and show you how a private annuity with a guaranteed income rider, how that would work so that you could guarantee that income and know that these projections are accurate. You're listening and watching the Worry-Free Retirement. I'm Tony Walker. I'll be right back. Let me get the whiteboard out. You stay tuned. I'll be back shortly.
I want to retire and do the things that I enjoy, but I don't want to run out of money either. I've talked to some advisors but I don't feel like I have a game plan. I wish there was someone out there that specialized in making this simple.
Over the past 30 years, I've helped thousands of people be worry-free by creating a financial game plan that provides mailbox money for life. I'm Tony Walker, and I can help you too.
Log on to TonyWalkerFinancial.com.
Worried about running out of money in retirement? For a limited time, five-time author and retirement specialist Tony Walker is making available his latest book, Mailbox Money for Life. For your free copy, simply log on to TonyWalkerFinancial.com.
And now it's time for Tony in the Trenches.
All right, had to drag out that Tony in the Trenches. Somebody said, hey, where's the Tony in the Trenches? I love that thing. So we do have a question. We get a lot of questions. By the way, our new website, TonyWalkerFinancial.com, little icon to the right there just says, Ask Tony. Get that question to me. If we put it on the air, like I said, I won't repeat your name, etc. But this was a really good question. Obviously, they had watched last week's show on the teacher's retirement bit that I did. And here's their question, all right? They said, we are both teachers, husband and wife. We have retirement income as well as annuities. We are not looking to change anything right now. No problem. You know, a lot of times I've had people come in to see me and they'll say, well, I was kind of wanting to look at some different options, but advisors want me to move everything over before they'll even talk to me. I'm not sure what that's all about, but we don't require you to move all of your money over to work with us. We want to work with you, earn your trust, and hopefully you'll see that, hey, maybe you should consider moving more things over to us over time. So we're happy to look at single shot deals like what this person's bringing up. They do like cash in the bank. So I know they're savers. They've got quite a bit of money in the bank and CDs, but as he puts it, they aren't doing anything for us. They want to know, what would you do with a certain amount of money that's in CDs? We want it liquid, and I just want a short answer to this short question. So, you know, we go back to the Charles Schwab platform. What we have done with Charles Schwab, I've created 3 model portfolios. I do have discretion over those accounts, so we can watch over them. In fact, since we started this program in April, we have literally moved over $35 million into this platform. So, number one, first of all, because I think it's watched over fairly closely, and it's very inexpensive, and the fees associated with the funds we choose are very inexpensive. So it's a very, very good platform, and we're getting a lot of these because savers sometimes just want it very conservative. They're okay with a little bit of risk, but they want it liquid. They want access to their money, and with this platform, we can do that. In fact, Shannon in our office, if you have any questions, she can at least get you some information. I'll be happy to meet with you in person. All you got to do is go to TonyWalkerFinancial.com, click on that Let's Get Started button. If you want to email Shannon any questions, again, I am the fiduciary. I would need to make final decisions, but she'd be happy to send you the information. Her email is Shannon@TonyWalkerFinancial.com. Great question. Thank you for your questions, by the way. All right. So you might be sitting there saying, Tony, I'm really confused over all this whole pension thing. And we're not trying to pick on the teacher's retirement. This is with any type of pension or calculation or Social Security or how annuities, insurance companies calculate things. When you're talking about mailbox money, remember, what's the definition of mailbox money? Mailbox money is guaranteed income you can never outlive. So last week we talked about, well, who's promising all this stuff? These big institutions, what if they can't fulfill the promise? And therein lies the problem, and that's why the teachers are so nervous right now. So I'm going to go through an exact example of how things are projected and calculated and why this can be a problem. Now, I don't know the exact numbers they've used. I've read some articles about all this. So if you're in the know on this, specifically with the teacher's retirement, I'm not trying to mince words here, but these are just examples, conceptual, okay? I don't know the exact returns of the teacher's retirement. But here's how we do this. We're imagining we have person A or person B, or you could say plan A or plan B. So originally, this is called the present value. So to calculate, we're wanting to calculate the payment. So let's imagine you're a teacher, okay? You're finally at retirement, and somewhere, somehow, because of your years of service, right, age, all that stuff, they're going to come up with a payment, all right? And they tell you that, you know, Mr. or Miss Jones, because you worked this long and you're getting ready to retire, in this example, we're going to pay you $2,982 per month for the rest of your life. Now forget whether there's a survivor option, forget pop-ups. We're not getting into that. We're just imagining this is a single life. We're trying to keep it simple. And you say, well, where did they come up with that number, Tony? Well, they came up with it in this example. We had $500,000 in the pension. This is the liability, so this had to be funded. So in other words, they have $500,000 somewhere earmarked for your name that pays the $2,982. And you say, well, that seems like that'd be hard to determine because you don't know how long you're going to live. And you're exactly right. So how do they do that? So then maybe whoever helps in this pension, actuarially, N stands for number of years. So in this example, they're imagining you're going to live 30 years, which it's a variable, but that's what they're imagining. And then the final variable to fill is the interest rate. What interest rate are they going to earn? In this example, they assumed, here's where it gets a little tricky, they assumed over that 30-year period of time, this number, if you take $500,000 at 6% over 30 years, it will pay, guaranteed, if it makes this 6%, $2,982. But you say, well, Tony, what's the problem? Why is there a problem? Well, you're getting ready to see this. So let's change this up a little bit, because this is what's happened. The pension system, as I understand it, hasn't come near to earning what they assumed. The rate of return has been lower. So let's assume, I don't know what it is, instead, it's only been 3%. You following along? So on the assumption number A, or letter A, the $500,000 is going to pay you $2,982. That's the liability that the state has to come up with that because you're still alive. They got to pay that. And the problem was they assumed to fund that liability, they'd make 6% over the next 30 years. Problem is, when they say it's underfunded or it's an unfunded liability, this is the problem. They've only made 3%. So, but you still get your money. See, here's what they're worried about. They're still paying you $2,982 a month, plus a lot of other people, but they made all of these assumptions on 6%, so what happened if all they made was 3%? When would this pension plan, in this example, it's just an example, run out of money? Roughly 18 years. So this is the problem, folks. The same thing with Social Security. If you say, how come they keep backing that number back? I thought Social Security wasn't going to run out to 2042. Now it's 2036 or whatever. This is what they're recalculating. They're realizing that they're not making the interest or yield on the money. And this is part of the problem with short-term interest rates. These short-term interest rates have helped Wall Street and the market grow and grow and grow. And yeah, it's been great for people wanting to refinance homes, but for savers, this has been disastrous because a lot of the yields and a lot of the stuff that's backing this up is so low right now. And what's happening is, the problem is, the only option you have if you're a pension plan organizer that's running all this stuff, you're going to have to go find riskier investments to try to beef that up, which makes it even more potential dangerous. Now, how does a fixed indexed annuity work? With what we call an income rider. Well, I ran something off for you. This is just one of our companies. Let me grab this out here. And let's just look at the difference here. Now, the way you use an annuity properly, by the way, folks, if you've recently thought about an annuity, been to a dinner seminar pitching annuities, 99.9% of all these people buying you steak dinners, they're going to end up talking about annuities, folks. There's no free lunch. And yes, I sell annuities too. There's a lot of commission in it. And you're thinking, how do they afford all these dinners? That's why, because they want to sell you an annuity. So before you do anything, at least get a second opinion. There is a lot of confusion on what's called income riders. So the income rider, in this example, we're doing the same thing. This would be a fixed indexed annuity with what we call an income rider. And what we do in this case, you might have a 401k or you might have an IRA, and you say, well, Tony, I want to move that because I want mailbox money. I'm tired of all this risk in the market. The market's up right now. I want to lock in my gains, right? We're doing a lot of this right now because people are nervous that the market is at an all-time high. So the $500,000 goes in what's called a guaranteed income account of 6%. Now you've got to remember, it's just like a pension, folks. This 6%, you can never take it out lump sum. You have to, at some point, take it out over your lifetime. That's the only way the insurance company can pay these kind of rates. So what I'm going to do is I'm going to show you, this is just one company. They all vary, and they'll change by the time you see this. These rates will probably change. So the best thing you can do right now, if you're thinking, man, I want to get some numbers here that are accurate or meet with Tony, the best way to do that is just go to TonyWalkerFinancial.com, click on the Let's Get Started. The best way to ever look at an annuity, you have to look at the whole ball of wax. We can do that at no cost or obligation. So what I did on this $500,000, let's reverse it a little bit. What if we waited 10 years on this and we used other assets to live on, which is how we program most of this stuff. So in 10 years, we would be able to pay, in 10 years, the payment would start and it would be roughly, it's going to be roughly $4,000 a month for life. And you say, well, Tony, how can they do that? Because they're an insurance company. They've got actuaries. They're doing the same thing they're doing up here. The difference is most of the assumptions they're making, the bonds, the yields, are, in my view, much more accurate and tried and true. Plus, the insurance companies have to be statutorily regulated by the states. They're looking at them constantly, reserves. In fact, I would encourage you to go to the Department of Insurance website, whether you're in Indiana or Kentucky, and look up this stuff. Look up the State Guarantee Fund. Try to learn something about how these insurance companies are managed and regulated within each other's domains. These are very, very predictable tools. Can insurance companies have problems? Well, of course they can. But over the years, I've been working with insurance companies now 33 years, they have proved to be very, very predictable. So let me close with this before we get into the Bible segment. Think about where you are right now in your life. If you're retired already, nearing retirement, or maybe you're at that age where you're thinking, gosh, I'm almost at halftime here. I'm getting close to retirement. I got to get a game plan somewhere in here. I need some mailbox money. Even if you have a pension like this one person, we can help you set up a game plan that can include mailbox money for life. But if you're talking to other people, make sure that they're making assumptions that are on the lower end. Remember, you want to have people under promise and over deliver. That's our method, and that's our thoughts at TonyWalkerFinancial.com. So give us an opportunity to meet. If you're a saver worried about money, we want to be of help to you. Log on to TonyWalkerFinancial.com, click on that Let's Get Started button, and I'll look forward to seeing you soon. I'll be right back with a few comments about the Bible, but first I got to get me a cup of coffee. Be right back.
Worried about running out of money in retirement? For a limited time, 5-time author and retirement specialist Tony Walker is making available his latest book, Mailbox Money for Life. For your free copy, simply log on to TonyWalkerFinancial.com.
Good cup of coffee, but all of a sudden I had to cut to the chase, and you're probably sitting there going, hey, wait a minute. That's not the same shirt he just had on the last segment. It's not, folks. I admit, first time it's ever happened. Last week, we were recording all of the shows. We're getting ready to go to the Bible segment. I had a client come in. I said, Aaron, I'll be right back. By the time the day was over, I had seen so many people that day. I told Aaron I was worn out. I said, can we finish that segment next week? He said, yeah, just be sure to wear a white shirt. We're here in white and wearing a checkered shirt. We're all good, though. Welcome back to the Worry-Free Retirement. Our last segment, we spoke about the idea of pensions, Social Securities, private annuities, and in particular, with the teacher's retirement and all that going on, the pension figures themselves and just how these calculations are really based on someone else's, we'll use the word assumptions, of what might be in the future. Now, with the state pension plan, it's obvious that many of these factors played a part in these assumptions, but bottom line, the man-made assumptions of the past are not working out too well in the present and certainly are going to fall apart in the future. Well, I got good news for you, folks. In God's economy, He's never wrong. In fact, God, in His infinite wisdom, shared with us last week, or maybe it was 2 weeks ago, I'm losing track, in Revelation 18, the concept of the world's financial system crashing down. Not the politicians, not the religious folks. It was the merchants that grieved so much and how quickly the world system fell apart. So the point is, not to put all of your trust in man's assumptions when it comes to you and your money. You got to have another plan. You can't simply put all your faith and trust in the state retirement system or in the government Social Security or in the stock market or even in some annuity that's going to pay you enough money to live on. You can't totally put your faith in anything like that. The reason many of you, let me say this, are so weighted down by your worries right now is you're putting too much faith in the world. You and I have grown too attached, and the evidence is we worry. Let's face it, the reason we worry so much is we forget to put our trust in God. The same God that created the heavens and the earth, the same God, more importantly, if you're a follower of Christ, that sent His Son for you and I so He could help us handle these problems. So the downfall of the Social Security system, maybe the stock market, the pension plan, a potential lack of income from an annuity that you thought you were going to get, it doesn't matter. It's evidence when we worry that we're getting too attached to the world system. So here's what you got to do, folks. You got to be able to walk away from the worries, and here's a test you can put yourself through. If any of these things you and I are so dependent on were taken away, or if we could even walk away, here's the big question, could you walk away from some of these things that you and I are so dependent on? Would you have any regret? And if you didn't have any regret, it's confirmation that you shouldn't be worried about them anyway. In your mind, spiritually and emotionally, sometimes you have to walk away from it. In your mind, if the teacher's retirement system has to change, it has to change. Walk away from it spiritually and emotionally. Quit getting so tied up in this stuff. And you'll find, and you'll be able to walk away from the same trap that they talked about in Ecclesiastes, when Solomon said, man's evidence of this, he'll say that money is the answer for everything. And isn't that where it's at right now, folks? Folks, this is not about the money. This is about you being able to use and enjoy, protect it, but ultimately to put your trust in God. Well, how about you right now as you watch this show? Maybe you're looking for a different perspective on money. Somebody who can help you with your worries, diversify things a little bit, and try to give you a game plan that lays out realistic expectation for you, your life, and your future. Folks, for the last 33 years, I've dedicated my life's work to helping savers worry less about money, and we want to help you too. Why don't you log on to our brand new updated website, saver-friendly website at TonyWalkerFinancial.com. We can get started by meeting in person. You can attend our next free workshop coming up, Mailbox Money for Life. Speaking of Mailbox Money, why don't you order our latest booklet, absolutely free, Mailbox Money for Life. And after you do that, we'll be happy to talk to you about a personal game plan at no cost or obligation. We've been watching the WorryFree Retirement. I hope you've enjoyed today's episode. I'll see you next week. And in the meantime, you remember, if all else fails, you be worry-free. Make it a good one.
Thank you for watching the Worry-Free Retirement with Tony Walker. If you need a safe and simple game plan for your retirement, log on to TonyWalkerFinancial.com and schedule a free, no-obligation meeting with Tony.